Merry Christmas and happy holidays, everyone. I'm going to try to keep this short, but if you know me, that's absolutely impossible. So, first things first, going into the end of the year, you know what? Sometimes your game plan is wrong. Do you fight it? Absolutely not. You have to go with it. You have to admit the market is a bigger and larger and a more capitalized entity than you are. And if you fight it, you're just going to you're going to kill your account. You're going to kill your emotional, your psychology, all of your mental capital that's needed for this game. You're going to have it wiped out. So what happened is, of course, going into the end of the year, I really thought that we were going to have a Santa Claus rally. I really didn't think that it mattered that it was a bear market or not. However, following this sell-off of the CPI, the hawkish commentary out of the Fed, then followed by the hawkish commentary out of the ECB and Bank of England, we just continue to sell off. And in the current condition in the market, there is one axiom. I believe I have the statistics right. I apologize if this is incorrect, but trust me, it's very, very close. Since 1950, the seasonal period of December 16th to the end of the year, 57 times we've been higher, 12 times we've been lower. I am sure I have some of those numbers off, but it's about that. It's 57 to 12 higher to lower. And the annualized gain from December 16th to the end of the year since 1950 is over 35%. I mean, it's an incredible time to be long. But remember, there are those 12 negative years. Well, here's the thing to that. In a year going into the Santa rally, that the S&P 500 is down 17% or more, and that's a key number because heading into December 16th, do you know how much we were down? 17%. When that happens, it's happened 5 times out of the 12 times during those seasonal bullish periods. All 5 times, no Santa Claus rally. So I don't expect one anymore, but if we do get one, this is the sweet spot. Our short holiday week, there's not going to be a whole lot of trading. There won't be a whole lot of sellers in the market. We'll probably lift off to the end of the year, but I got to admit, the Santa Claus rally did not happen, and that 17% number held true. So with that being said, moving forward, with the condition of the market, I accidentally pressed the erase all, and all of those lines that you've always seen on my charts, I just erased them. So I can't even show you those lines. But the bottom line is there's, we'll draw the downtrend line. This downtrend line from this high, I'm just going to cut it through all of those. It's a best fit downtrend line until this S&P 500 is back above the 200-day simple moving average, this downtrend line, and this CPI high. There is no way I can be bullish short term on this market whatsoever. But that being said, as long as we're not below the October lows, it's hard to be extremely bearish on this market either. So I think, like I said in last week's video for the 2023, I expect a lot of chop and a lot of randomness. And I know that there's a lot of stuff on here. And once again, for those that aren't used to watching my videos, I'm going to remind everybody, all that I care about is price. Price is king. Volume is secondary. Resistance lines and support levels are tertiary. All of this stuff that you see down here, this is all quadrary. This is the last thing that I look at. It's always price, volume, support, resistance. Then if these line up, it's great. But here's a simple way to keep you out of trouble. On a monthly, longer-term time frame, pretend like these are green light, red lights. Pretend like the TTM trend momentum, when it's below this 0 line, the dots, it's like a red light. So we have a red light. Pretend like whenever this indicator is red, it's a red light. Red light. Pretend like when this indicator red is red light. Red light, 1 green light. So we have 3 red lights, 1 green light on a longer-term time frame. I probably shouldn't be that bullish on the market looking for a bottom. When it comes to this indicator, we're below the 0 line. We have 2 red lights, 2 green lights. That says mixed to me. On the daily, red light, red light, red light, red light. So short term, it's a red light kind of market. But I still believe 2023 going to be very choppy. I called before 2022 started, I called it the year of the active day trader. I expected a bear market. I told everybody before 2022 started that I sold sold about 50% of my long-term portfolios before 2022. Told everybody what my game plan was in the long-term portfolios. SPY 400, buy a little bit back. SPY 380, buy a little bit back. And if I ever got to close at or below SPY 350, I let everybody know well before October that it was going to be a 50% signal. Then we continue to piecemeal into the long-term portfolio if the market falls at 320, 300, 280, getting all in at SPY 250 based on historical precedences of bear markets. Negative 55% is about as bad as it gets, minus one time in 1929. That's it. And or after that 50% add, if none of this happens, once we get quantitative easing, the Fed starts buying assets on the balance sheet again, we get a real follow-through day with real leaders, then bam, we're back in. We're all in on the long-term side. But for right now, the long-term portfolios, I've done some piecemealing in between SPY 380 and this 350 hit, but it hasn't happened yet. I ultimately thought that SPY would bottom around 340. Based on what I'm seeing, though, with the macro data and based on what the Fed is saying, I now expect the bottom potentially to be at SPY 320. If it doesn't happen, though, I've got all my game plans laid out. Every member of Big Wave Trading knows exactly what we're supposed to do when certain situations happen. I have a game plan on the way down for the long-term portfolio, and I have a game plan on the way up. I want to make that mention because I let all the members know exactly what I'm going to do in my long-term portfolio before I do it. Now, getting to the quarterly portfolios, I expected a Q4 Santa Claus rally. So the quarterly portfolios, which are reconstituted every 90 days, 4 times a year, it's been an all cash all year long until the November reconstitution. I didn't go 100% into these quarterly portfolios. I only put 25% into it. However, everything has changed regarding the market and this potential Santa Claus rally since here. So what I'm doing now is if we get a bounce into the year, all of those quarterly portfolios, I am then going to, let's say that this is a quarterly portfolio name. Let's pretend like this is a quarterly portfolio name. Once this starts to bounce, I normally do not do this on my end, but I will be putting a stop below the recent lows, just in case we do get that early year sell-off. So that's what I'm doing on the quarterly portfolios. On the swing side, we've had quite a few winners lately. The problem is you cannot increase size in this market because it's really, really, really random. Now, I have my setups that I love. It involves a max green BOP indicator on Telechart version 7, along with a volume truncation, excellent price action, when I normally see it being a leader within a sector. Grade A signals off this October low on my swing side, they just been non-existent. I have had 0 grade A signals via what I like to see personally during this entire uptrend. On top of that, cancel them swings, cancel them end-of-day position trades. I would say I've had 0 grade A signals. I had more grade A setups during this March bounce and during this June bounce than I've had during this October bounce. So I think that says a lot about the current uptrend. But that being said, I've had more grade B signals during this bounce than this bounce or this bounce. And I would say I've had 2 times as many grade B signals on this bounce than I did on these 2 bounces. So it's a very weird market, and that's why I think it stays choppy. And if you don't think that that makes it even more weird, I'm about to show you something that's going to happen when the NASDAQ's down 20% on the year, the very next year. That kind of indicates what I think about all this chop. But all this being said, on the end-of-day swing side, I want to show you guys, we've had some winners, excellent winners. Got long CBAY here. Now, the signal that I got on CBAY here, back in the day, I used to get right here, or I would get on this hammer candle. But you can see CBAY has been perfect. This is how they're supposed to act after I get long. But unfortunately, these are not the norm. They are rare. I also got long PFMT on this breakout day here. Look at how it's performed since getting long. In a good market, you can load the boat on these breakouts and ride the trend up. In this market, once I'm up 5% or more, I immediately raise my final stop to break even plus 1 cent. I want to make sure I don't go run on the trade. I do not do that in strong markets. I don't do that until I'm up 20%, not up 5%. The other thing that happens, if I do get long something and if it doesn't work immediately, that's it. The stops get raised and we get out. For instance, DKS was a new long position. This started to work, but when it started to squat here, Once this bar happened, where do you think my final stop was? Now, when I initially went long, the rational logical level is here. But once it starts to really go nowhere, my final stop went right here, and I was knocked out of DKS for a very, very tiny loss. And we'll keep it that way. But there's been other winners that still do really well. CALM is a recent long position. This has acted perfectly. And then the best setup so far, WFRD, this was the initial buy, added to it here, added to it here, and it has been perfect since. Had a tight squeeze, but this has been the very, very rare bird, which is why our main time frame of focus is intraday, and it will remain intraday for as long as we have stocks moving like ORC, AMAM, the way that it moved intraday, PHVS, there you go, Josh. The way that these stocks move intraday, it's not much, but you can see what APE's doing. These are the stocks that we're focused on intraday, the small cap movers. We're looking for pre-market volume, pre-market price movement, and I know the setups I'm looking for, and this will remain where I focus until the macro data that I'm about to show you changes. And it's very important to look at all these numbers because this is really going to guide me to when I decide to flip bullish on this tape. All right, so I'm just going to bring these charts over one by one and explain the situation. The first thing I want to talk about is the Fed funds rate. So this is their target rate probabilities for November. They're at 4.75. 5 is the target rate, and that's going to be achieved around March. The Fed plans on pausing rates at March. However, they don't plan on cutting rates based on this current predictions, the target rate, until November of 2023. Now, if we are in a long bear market and if this continues to play out, history suggests that we don't bottom until after the Fed begins cutting rates. It has bottomed before, like in 1994. The Fed was still hiking rates. We bottomed, they paused, and they cut rates, and then we flew. If that happens, great. But if we're looking for a pivot via quantitative easing, which is something that I like to do if I don't necessarily get price and volume action confirming on the market and leading stocks, I look for the quantitative easing pivot. That's not coming to November 2023. So keep that in mind. Another thing that I always look at, and I want to know what the biggest buyer in the stock market's doing, the Fed. And as you can see, the Fed balance sheet, they are still selling. They said that they were selling, and they started to sell at the beginning of the year, but then actually look at what they did while they were raising rates. They were buying. But since March or April, they've been doing nothing but selling. And I believe that this most recent number is from December 21st. They're still selling. You have the biggest, largest holder of equities and assets selling them into the public markets. Do you want to be on the other side of that trade? That's the questions I always ask myself. And then if you want to know why things aren't like what they just were, this is M2 year over year monthly growth. Look at what happened 2017 to 2018. Then they start injecting liquidity into the market. And then that big uptrend that we had in 2020 and 2021, it's all because of all of this liquidity that was sent into the market. And as you can see, it's coming out. So you have the Fed tightening still, peak rates still not here yet. You have the Fed selling off assets on the balance sheet, and clearly the money supply is slowing. It's hard to be bullish for 2023 right now as of the current conditions. And now I want to end this video lesson with a very interesting chart. What you're looking right here is what happens after the NASDAQ drops 20% in 1 year. Remember how I told you guys that I believe 2023 is going to be extremely volatile and choppy? The year of the active trader, day traders, and or quick swing traders, i.e. once again, take profits at 5, 10, 15, 20%. Once you're up 5% or more, stops to break even. I really recommend doing it even before you're up 5%, to be honest with you, in this tape. Why lose money? It's so easy to lose money in this tape. Don't do that to yourself. I use break-even stops intraday. I use break-even stops right now on the end of day. I don't see that changing until something changes. But I expect 2023 to be very choppy. And look at these numbers. This is what happens after the NASDAQ's down 20% for the year. The very next year, sometimes it's really ugly. Sometimes it's really good. 1 to 1, 2 to 2. Big down years, big up years the next year. What do we think is going to happen for 2023? See that question mark? That's where I'm at. So the market doesn't know. I don't know. I think it's going to be choppy, but based on the charts that I showed you, I think we have a clear indication of what side we should err to the caution on leading into the beginning of 2023. And maybe at the end of 2023, things will look good. But I tell you what, when these charts show up, WFRD, when these kind of setups show up in raging bull markets, I don't take piker size. I take big, large positions. When stocks that are the quality of SMCI set up and break out, large positions, not piker size positions in bear market bounces, but large positions. So I'm going to wrap the video lesson up there. Once again, Merry Christmas, Happy Holidays to everyone. I hope you're enjoying your long holiday weekend with friends and family. Once again, show me, if you can show me some love, that'd be great. If not, no big deal. Thumbs up, subscribe, like, comment. I love comments. I love chit-chatting about the market. And I just want to let you guys know that we're running a holiday special right now at Big Wave Trading. We've been running the holiday special for 365 days, 24 hours a day, 7 days a week, every year since the beginning of the website. The price is already extremely discounted for the value you get. If you enjoyed everything you listened to in this video lesson, if you learned a lot, if you're interested on trading on different time frames according to what the market does, and having someone that will guide you through the process and give you the exact levels before he enters his trades and tell you exactly where he's exiting, and we'll show you the screenshots of his fills when that happens. Please come and join the Big Wave Trading family. We would love to have you. All right, everyone. I'll see you next weekend. Have a great rest of your holiday weekend. Aloha.